Russia's economy isn't perfect. Even with record economic growth, Russia is on the brink of bankruptcy due to the Ukraine war and other economic reasons that could lead to almost a decade of economic decline. Putin is setting Russia up for a sustained economic crisis after his death. In this video, we'll examine the Ukraine war-related causes that are driving Russia toward bankruptcy and explain why its growth claims are misleading. We begin with war's direct effects. Immediate economic impact of invasion. CEPR reported that Russia's February 2022 invasion of Ukraine caused domestic misery in the months that followed. Russia's economy shrank 4.4% in weeks, threatening catastrophic disaster. People waited in the streets to withdraw money from banks after the Russian currency fell 40%. Russia had to act quickly to reverse these impacts. It raised interest rates to 20% and introduced capital controls to stabilize the economy. Putin pledged higher public service investment, starting with housing and moving to the military. The crisis was temporarily avoided. Initial war costs and estimates. Putin's approach to economic challenges shortly after the war set Russia on the path to becoming a wartime economy. That issue will be elaborated on later. Russia spends $500 million to $1 billion each day on the Ukraine war. Ground Report reported these numbers in May 2022. According to a Center for Economic Recovery analysis, Russia spent $7 billion in the first 5 days of the war, or $1.4 billion per day. Since Russia sent many of its best soldiers and weapons into Ukraine to quickly conquer it, these expenses would plummet. If that fails, Russian spending will fall, though it remains high. A key point is that the $7 billion amount only includes direct losses like equipment and workers. It also estimated that Russia's GDP would lose 2.7 billion due to the first 5 days' human losses. As the fight turned from smash and grab to attrition, new numbers emerged. For instance, U.S. military analyst Robert Farley estimated that Russia spent $500 million each day, though the actual cost may be greater. Russian state-owned media firm Russia Today owns Ukraine.ru. They estimate that a single day of the special military operation may cost $20 billion. Other sources use Russia's wars to calculate costs. Russia's special military operation in Syria costs $2.4 million a day, according to Ground Report. That mission involved 1,600 troops. By May 2022, Russia had sent 149,000 troops to Ukraine. The math suggests that this would cost $223.5 million per day, but that doesn't account for the Ukraine war's significantly bigger equipment load or Russia's additional hundreds of thousands of soldiers since May 2022. Rising military costs and economic impact. In these early conflict months, SoftRep editor-in-chief Sean Spoons had his figures. In an interview with Newsweek, he estimated that Russia spent $900 million every day on munitions, equipment, and repairs. Each of the thousands of cruise missiles Russia was releasing cost $1.5 million, he noted. The figures vary per source. Even at $223.5 million per day, Russia's special military operation is astronomical. If the amount is correct, Russia has been at war with Ukraine for 885 days, costing $197.79 billion directly. Spoons' $900 million per day number makes the issue worse, as Russia has spent $796.5 billion. The real figure is probably between those two. Putin has spent a lot to launch a coordinated attack against Ukraine. Russia's long-term economic impact of sanctions. Russia's economy in 2024 is projected at $56 trillion, similar to the previous years, generating enough revenue to cover daily war costs, though it strains the average Russian civilian. However, beyond direct military spending, the broader economic impact since February 2022 is significant. Sanctions are a major factor, with the US, EU, UK, Canada, Japan, and Australia imposing over 16,500 sanctions on Russia. These sanctions froze $350 billion of Russian reserves and led to the G7 offering $50 billion of frozen assets to Ukraine. While Russia has circumvented some penalties, including using a shadow fleet to sell oil above the $60 per barrel cap, its economic growth has still been reduced by 5% due to these sanctions. Sanctions have also hindered Russia's economic diversification. Before the war, Russia was focusing on technological development to support its energy-driven economy. But now, with capital controls and a militarized budget, diversification has stalled. Although Russia continues to grow as long as the war persists, its future depends on its reliance on oil and gas, with little focus on technological advancement. Russia is turning to nations like Iran, North Korea, and Turkey to replace Western trade partners. But this is a temporary fix. Long-term, Russia faces economic challenges as it moves further away from state capitalism, making it vulnerable to future economic shocks. Debt, deficits, and economic challenges ahead. In July 2022, the WEF reported Russia's first foreign debt default since 1918, highlighting the impact of Western sanctions. Russia defaulted after failing to repay $100 million in interest on two debts within a 30-day grace period, citing issues with the Euroclear clearinghouse. Despite claiming to have made the payments, Russia's failure to access foreign currency due to sanctions led to the default, making its foreign trade revenue less valuable and increasing future borrowing costs. Russia now faces a higher credit risk, with foreign lenders demanding stricter terms and higher interest rates. The default also complicates any future economic recovery, as Russia's limited access to currency reserves and frozen assets continue to hurt its economy. Despite this, Russia claims to be experiencing economic growth, with Putin asserting in March 2024 that Russia is outperforming its critics. However, experts like Owen Matthews argue that Russia is depleting its national wealth fund, which fell to $56 billion by 2023, insufficient to meet Putin's stated goals. Russia spends $4.4 billion monthly from this fund, mostly on the war in Ukraine. Dmitry Polivoy of Astra Asset Management estimates that $130 billion would be needed to fulfill Putin's economic promises. The continued war spending and long-term sanctions, along with dwindling reserves and reliance on oil assets, suggest Russia's economic challenges are growing, with long-term financial instability on the horizon. Russian economic post-war prospects. In conclusion, Russia's economic development appears to be a smokescreen for serious financial issues that will hurt the country long after the Ukraine war. Putin and Russia suffer more. In the months after the conflict, Russia raised its base interest rates by 20%. It had slowly decreased to 16% by mid-2024, but that will reverse. Russia's central bank was expected to raise its key interest rate by 200 basis points to 18% in July 2024, according to Reuters. Russia must deal with an overheated economy and widespread inflation if the rise goes through. The country's 9.2% inflation rate is due to acute labor shortages, wage rise across several sectors, massive governmental spending on the war, and rising retail and corporate loans, according to Reuters. That's 5.2% above the Russian central bank's 4% objective. Several questions arise. How does this affect Russians, and why would Russia seek to cool its economy? The cooling is wanted because Russia wants to cut corporate and retail credit rates, which have grown even as inflation has risen. Russia's central bank realizes that defense sector expenditure has driven economic development and that over-reliance on it is risky. As expected, it faces opposition. Many in the defense sector want rates to stay at 16% or drop so they may borrow more. Borrowing increases output, which they say might boost economic growth to 5% this year. To address the first question, that expansion hurts the Russian people. While Russia's incomes rise, so do daily goods prices. Russia has above 9% inflation when most of the West has controlled it. Raising interest rates will lower Russia's cost of living crisis by bringing inflation closer to 4%. However, raising the base rate to 18% makes loans less available to normal residents, reducing consumer spending. The Russian economy, heavily reliant on the Ukraine war, faces severe challenges once the wartime economy ends. In 2023, defense spending reached 10% of GDP, a stark contrast to the 2.9% the U.S. plans to allocate in 2024. Public spending surged by 40%, primarily for military expenditures, including soldier wages, equipment, and compensation for casualties. Economic sanctions, while impactful, are not Russia's primary challenge. The lack of economic diversification is. Funds have been diverted from technology to defense, leaving sectors outside the war effort stagnant or in decline. Investment in non-military industries has flatlined, particularly in technology, which is now years behind global competitors. Direct foreign investment fell by $8.7 billion in the first 3 quarters of 2023. Meanwhile, war-related industrial production rose by 60% in early 2024, driven by the need to replace massive troop and equipment losses. However, this growth is uneven, benefiting weaker regions while exacerbating struggles elsewhere. Long-term growth prospects are bleak. CEPR forecasts economic growth of 1% or less due to a shrinking labor force and depleted productivity. Over 601 million Russians fled in 2022 to avoid conscription or oppose the war, and casualties have further decimated the workforce. Ukraine reports nearly 46,000 Russian troop losses as of May 2024, with the total likely exceeding 2 million by the war's end. Combined with pre-war labor shortages of 4.8 million workers, Russia's labor crisis is deepening. As oil and gas revenues sustain the war economy, they are insufficient for long-term recovery. Russia's reserves may run out within 12 months, and sanctions will continue to stifle trade and investment. The country's shift to state capitalism, compounded by frozen assets and war expenses, suggests economic regression and potential bankruptcy. To address the labor deficit, Russia may increasingly depend on alliances like North Korea to supply workers. Rebuilding sidelined industries and addressing sanctions will be a protracted and costly process, leaving ordinary citizens to bear the brunt of the financial collapse. Inflation is driving up living costs, and rising interest rates make borrowing money harder. It all points to Russia's economic downturn, something you might not have predicted based on its current growth rates. What do you think? Will Russia be able to recover from its economic woes after the war? Many thanks for watching the video. Leave a remark. Thanks for watching our video. Please like, share, and subscribe to our channel. Goodbye, and see you.